Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at a breakout trade on crude oil. So crude oil has attempted to push lower and has essentially just been caught in an area that it's just not able to go any lower. You can see I've got the arrow line drawn on there, and it's just having a really, really hard time getting through that location. So what I want to do is I want to get into this trade long on this failure to break lower. So we got this really, really big sell-off. Now this is after the weekend where we were up almost $3 on Sunday. Huge rise up over the weekend. And then we've come since then, kind of been profit taking on our way back down. But this final push down right here kind of gave us a lot of volume coming in right before the open here, and the volume started kind of flipping in the other direction. And when we started getting all these wicks at the lows and the volume is just sort of shifting, we're not seeing really a whole lot of emphasis to the downside. There's not really much telling us that we're going to go basically down any further. We're seeing a complete rejection, especially at the test down here at these lows. So this bounce off of these lows right here, we're looking to play just right back up to the upside. Now the stop started out at -5, and then actually I'm going to drop it down just a little bit down here. We've got enough locked in on the trade now where we can risk a little bit. But essentially the way that this trade sort of set up is we got in, our stop initially went to -5, so 5 ticks on 4 contracts is what we were initially risking. We got our first target off at +5, and that gave us the ability to essentially be break even. The second one gave us a +10, which we've already taken out, and now we're actually above that, where we are able to kind of play around with a little bit. And now this final one pushed up and gave us a +20, where we're actually seeing quite a bit of volume come in, but that was where we are able to actually see a nice push through by the buyers. So there we go, I've got the data series set up here. Now, using that type of risk reward, we're able to, even if I needed to, like right here where I move my stop down a little bit, that gives us a little bit of fluctuation because we've locked in quite a bit of profit already before we started seeing an even further push up. So this move higher came after a really, really strong looking rejection where the sellers just started to kind of fail. They lost steam. They got a really, really big push down before the open and then just kind of rattled around. And then coming into the open, that opening drive gave us enough oomph to the upside to where we were able to easily fill our targets right back up again. So 2 off at +5, 1 off at 10, and 1 off at 20 for a total of $400 on a picture perfect failure from the seller. So that's going to be today's trade. If you have any questions about it, feel free to send an email to School of Trade, and don't forget to check out our trial at schooloftrade.com. Have a good one.